So Bitcoin is powered by chaos because chaos will never go away. It's always going to devalue all of the traditional physical and financial capital assets. And it's going to be the driver that causes all the smart money in the world to run, to sell their physical and financial assets and to buy a digital asset.
Michael Saylor emphasizes that Bitcoin thrives in chaos, unlike traditional assets vulnerable to inflation, regulation, and collapse. As financial systems grow unstable, Bitcoin's value proposition strengthens, making it a vital hedge against global uncertainty. Saylor warns, ignoring Bitcoin now could be a costly mistake in 2025. Make sure to watch the rest of the video where Michael Saylor shares more fascinating Bitcoin insights.
Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later.
Now back over to Michael Saylor.
I think there's a lot of double reverse logic that takes place in the macro trading environment. Like, for example, if you knew there was lots of inflation over the long term, the number one thing to hold is Bitcoin. But when people print a big inflation number, Bitcoin will trade down in the short term. But the double reverse logic is inflation is high, therefore the interest rates are going up, therefore money is getting slurped out, therefore I should find something to sell, so I'll sell Bitcoin. And that's why I would say there are basically two ways to think about Bitcoin. Actually, there's three views. There's the trader, there's the investor, and there's the maximalist. Okay, the trader says it's an asset, I can get a handle on it, I can 50x lever it long and short. They're obsessing over whether or not good news is coming because good news is bad news and bad news is good news, right? And then they want to make sure they're the first one to get the bad news so they can treat it as good news so they can get out of the trade before the bad news manifests or something like that. And if you're one of those traders, you know who you are and more power to you. I'm not that guy. Then the investor view is, this is the dominant digital monetary network in the world. It's going to go up by a factor of 10 to 100. And I'm just going to hold it like Apple, like Facebook, like Google, like Microsoft. I'm going to hold it like my big tech monopoly for the next decade. And it's going to jerk around a bit. And I'm going to buy it on dips. The maximalist view is, this is property rights for 8 billion people. This is the greatest opportunity of the 21st century. This is economic empowerment for every business, every country, every family, every individual, right? I'm going to support it at all times, every way I can, forever, okay? And so you're talking to a maximalist here. It's not my skin is in the game. I'm beyond that. My soul is in the game. Thomas Lee, he's done some good work, and he says that Bitcoin generates all of its gains in like 10 days a year. And that just means that, you know, somewhere like 98, 97% of the time, nothing is happening and you're waiting for something to happen. I would say every macro theory about if the bad thing happens, that's good, and if the good thing happens, that's bad, and if enough bad things happen, that's really good, because then a bad thing will happen, which will be good for us in the midterm. I get it, it's all true, but I just don't choose to play the game. Look, Bitcoin's going to grind up 30 to 60% a year for the next 20 years, and my long-term risk cost of capital is like 29% for 20 years. That being the case, rather than try to time the market, it seems to me like a better idea would be go mortgage your house for 30 years at 3% interest or 6% interest, and then make an investment for 30 years that where you have 6% cost of capital and get 30% return on the capital, and you're getting 24% boost. So I think it's much better to figure out how you raise capital and lever the trade, or how you build a business that actually cashes in on that volatility instead of being the day trader trying to guess the volatility, because it just seems like it's a fool's errand for the average person.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.